You are never going to make money trading the Forex market. Trust me. My name is Margot, and today we're going to be revealing the question why so many traders fail in the Forex market. Thanks for tuning in, and I hope you enjoy it. So basically, one of the main reasons why most traders fail in the Forex market is because they end up getting trapped to what I call the cycle of doom. So, what is the cycle of doom? The cycle of doom is basically this. Let's assume now you start off trading the Forex market. You've got yourself a strategy, or you might have developed strategy yourself. You might have copied it from another successful trader, or indeed you might have bought it from somewhere on the web or so forth. So now you have this strategy and you're about to start trading this with live money. You start putting the trigger and off the bat. You start making some money. Everything's going great. Then the inevitable happens. You start losing some money. The strategy starts taking money away from your trading account. Now, this doesn't feel comfortable, so the most common thing you do when you start to lose money is you start to doubt the strategy. So you start to tweak the strategy. You make minor changes to the strategy, and then you get back trading again. And of course, you start to make some money again. And now you have the perfect strategy. But then, again, the inevitable will happen. You will start to lose money. Every strategy will go through its losing periods. But you doubt it. You start to doubt your strategy. So again, you start to tweak, you make further minor changes to the strategy, and off you go again. It starts to make money. Same thing happens. You start to lose money, and you tweak again. Eventually, after tweaking so many times, you are going to have completely lost faith in the strategy. You are going to throw it out, and you are going to go and search for another strategy. You are going to hop between that old strategy and a new strategy. The same thing will happen. You start to make money, and then the inevitable will happen. You'll start to tweak it, and then round and round the circle. The cycle of doom you go. Hopping and changing between strategies in the hope that you're gonna find the holy grail. Well, get this. It doesn't exist. How do you make sure you don't get in that cycle of doom? Well, first thing you need to do is you need to have confidence in the strategy that you're implementing in the market. Well, how do you gain confidence in your strategy? Well, you need to fully backtest the strategy. You need to put it through all the historical data so you know the characteristic of the strategy. You know how it's going to perform in winning periods, and you know how it's going to perform in the losing periods. And it's only then when you know and expect to have losing periods that you're not going to lose faith in the strategy. Moving forward, and you're going to continue trading that strategy, knowing that it's going to come back and give you the profits that you so desire. And that is you've seen in the backtesting. That's one of the main reasons why most traders fail in this business. The other main reason, I think, why a lot of traders fail in this business is because they come in with completely wrong expectations. Now they've read that all the marketing hype from the gurus and the educators, how you can trade from the beach. You can give up your day job. You can tell your boss to go and jump in the lake. You are now a Forex trader and you don't need to have that day job anymore. Well, that's complete hoggish. It's not gonna happen overnight. The other thing, misguided that out there is that you can start off trading and make a ton of money with a $500 trading account. Again, it's not going to happen. Now, that's not to say you can't make a decent living with a small trading account, but it's going to take time and it's going to take work on your behalf. Why do you think it is? The brokers offer you such bonuses to come and join them. If you put in $500, they'll match it with $500. They do that for one main reason. Because they know you are going to blow that trading account. Let's assume a broker signs up 100 new clients a week, each with $500 trading account, like small trading account. Yeah. Now they know that you're gonna lose that money. And that $100, that 100 clients a week, is a $2.5 million a year business for that broker. Because they know that you're going to blow that money. Because you're coming in with the wrong expectations. You need to be realistic about what you can achieve in the Forex market. A hedge fund manager would give his right arm, for example, to have a 25% return of investment. Imagine, like, you start off with a $500 trading account and you have a great year. You've made 25% on the initial deposit with your brokerage. That's about $120. $120 or wherever it is now. That's hardly enough to pay your internet. But you've got to make sure that you're coming into this with the right expectations, as I said. Also, the main reason why people lose money in this business is they over leverage, okay? They're taking unnecessary risk. And why are they taking unnecessary risk? It's because they have unrealistic goals. Again, you've got to ask yourself a question. Why is it that the broker will offer you 100, 200, 500 to 1 leverage? Because they know the greed mentality of most people. You're gonna lose that leverage and you're gonna blow and wipe out that trading account. So make sure you don't get trapped in the cycle of doom. Make sure you have the realistic expectations about the Forex market and what it can deliver to you. If you can start off and get your head around those 3 facts, then you're going to be halfway to becoming a successful trader. Now, that's about it for this video. If you like this video, give me a thumbs up. I'd love to hear from you also, like hear experiences and see if we can help you. So, looking forward to seeing you in our next video. In the meantime, and best luck with your trading endeavors.